Hey, how about those gold prices, huh? Oh, remember 2024 was a golden year for gold? It went up 25%. Oh, it was selling back then at $2,041 an ounce. You know what it's today? What it closed at? $2,843 an ounce. So this thing is going to go down. And so I need a sip of wine over here, a little vino. Mwah. Little vino, bambino.
In today's news recap, BlackRock's Kosterich likes gold, just not as a hedge against equity market volatility. The world's biggest asset management firm is reiterating its bullish outlook on gold, emphasizing its role as an important diversification tool in 2025. In a commentary published Monday, Russ Kosterich, managing director and portfolio manager of BlackRock's global allocation team, said he expects gold prices to continue rising even as the U.S. dollar and interest rates remain elevated. He added that gold remains well supported as central banks continue purchasing the precious metal and the U.S. government deficit continues to grow. Gold continues to work. Year to date, the precious metal is up 3%, beating stocks. On a one-year basis, gold has gained more than 30%, making it one of the best performing asset classes, he said. Regarding central bank demand, Kosterich said he expects China to remain a dominant player in the marketplace as it diversifies its holdings away from the US dollar. One of the reasons China is buying more gold is that they are buying fewer US treasuries, he said. While much of the shift can be attributed to geopolitical considerations and concerns over US sanctions, nagging questions regarding US fiscal sustainability are a growing consideration, not just for the Chinese, but also for domestic investors. At the same time, Kosterich noted that it doesn't appear the new Trump administration will rein in spending anytime soon. During the past year, the correlation between gold and U.S. equities has been approximately 0.25, indicating that the price of gold and U.S. stocks have a propensity to rise and fall together, he said. For investors, the implication is that, at least in the short term, gold is not an effective way to protect your equity gains. However, as a store of value for the long term, gold continues to make a lot of sense. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
So now you look at the markets. NASDAQ Composite, S&P, this is CNBC, moved higher on Tuesday due to a strong gain in Palantir. The tech-heavy index, one company goes up, the tech-heavy index goes up 1.35%. The S&P climbed 0.72%. And the Dow is up 134 points. Palantir shares popped up 24% on fourth quarter results. Other big tech names, such as NVIDIA, were moving in sympathy. What does that have to do with this? Oh, it's sympathy. I forgot. Stupidity. We see a dot-com bust coming. And it's going to change the whole game, man. The whole game. And what else? Oh, the Chinese, the tariff things going on. And Chinese slapped up to 15% on U.S. imports of coal and liquefied natural gas, 10% on crude oil, farm equipment, and selected cars, effective February 10th. Hey, how about those gold prices, huh? Oh, remember 2024 was a golden year for gold? It went up 25%. Oh, it was selling back then at $2,041 an ounce. You know what it's today? What it closed at? $2,843 an ounce. Price of gold is up $800 an ounce. And it's going up for a number of reasons. And a big one that no one hardly is talking about is the dot-com bust. And the other one, geopolitical uncertainty. Yep. You ready? The geopolitical uncertainty? U.S. oil prices paired earlier losses on Tuesday after an official said U.S. President Donald Trump plans U.S. official.
In today's news recap, central banks buy more than 1,000 tons of gold in 2024 for the third year in a row. World Gold Council. Central banks continue to dominate the gold market, collectively buying more than 1,000 tons of gold in 2024 for the third year in a row, and accounting for roughly 20% of total demand last year. In its annual and fourth quarter gold demand trends report published Wednesday, the World Gold Council said that total physical gold demand rose to 4,974 tons for the year, a record high. The report noted that record demand helped drive gold prices to consecutive all-time highs. Quoting price data from the London Bullion Market Association, the average gold price in the fourth quarter rose to a record high of $2,663 an ounce. The average price for the year rose to $2,386 an ounce, up 23% compared to the average annual price in 2023. The combination of record gold prices and volumes produced a Q4 value of $111 billion. This took 2024 over the line to reach the highest ever annual value of $382 billion. The report said. Along with central bank demand, the report said that investment demand for the yellow metal hit a 4-year high as over-the-counter demand outweighed relatively neutral demand for gold-backed exchange-traded funds. 2024 marked the first year since 2020 in which holdings were essentially unchanged, in contrast to the heavy outflows of the prior 3 years, the analyst said in the report. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
So, on another note, Bitcoin took a big hit, down 4.6%. It's about 97,000 per coin now. And a little bit of uncertainty there. But another thing came out. The available positions for jobs tumbled to 7.6 million, the lowest since September, and below the Dow Jones estimate, Bureau of Labor Statistics. There's a slowdown going on. In your Trends Journal, we have a whole column here, Spotlight Economic Gloom or Economic Boom. The facts are all there. From India to Germany to Canada, one country after another, slowing down. Oh, and on the .com, an entire special report. .com bust 2.0, the DeepSeek effect. This is the biggest economic section we've ever written in the Trends Journal. And we began publishing the Trends Journal in 1991. We began the Trends Research Institute in 1980. Never have we written so much about what's going on here. Again, trends on the global economic front. Top trend 2023, office building bust. It's right there in the background. So now with the office building bust, the dot-com bust, hey, don't worry about it. When all else fails, they take you to war because Trump is talking up war against Iran. And now, of course, as we know, Netanyahu is with Trump. And this is from Haaretz, the Israeli newspaper. Like you're living in hell. Gaza isn't a place for people to be living. The only reason they want to go back is because they don't have an alternative. That's bullshit. They'd much rather live in a beautiful alternative that's safe. Okay. Let's go back to the facts. Hey, Trump, it's in your Trends Journal. How about your son-in-law? Oh, back in 2024 at Harvard. That's very valuable waterfront property. Oh, I forgot about the oil and gas out there, too. And we want to move the Palestinians out into the Negev desert to develop that very valuable waterfront property. It ain't a desert, Jack. This is disgusting. So, going back to what I said and why they hated me, and this is in your economic update.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.